Now, while we've been concentrating on the stock market today, let's turn our attention now to the housing markets just to see if they got any effect from the suggestions that either interest rates won't be raised anytime soon. Perhaps it's a bit too early to even talk about the impact of that stock market fall today. But anyway, across the country over the weekend, 1,540 homes went up for auction and 61.7% of those sold. Now, that's better than the previous week, and the clearance rate was 58%. Now, in Sydney, there were 450 auctions, 63.5% of them are sold, and there were a further 1,534 private sales across New South Wales. In Melbourne, 614 auctions. The clearance rate here was better, 66.8%, plus an extra 1,114 private sales. In Brisbane, there were 78 auctions, a clearance rate just 57.7%, but more than 1,000 private sales as well. In Adelaide, have a listen to this, 81 auctions. The clearance rate's an astonishing 80% plus. Plus, on top of that, 266 private sales. In Canberra, 46 auctions. Just 45.7% of them were sold. There were 102 private sales. Finally, in Perth, just 5 auctions, but 533 private sales. So let's bring in here REA Group's Director of Economic Research, Cameron Kusher, who joins me from Brisbane now. Cam, many thanks for your time. See, it's interesting. There's so many things to unpack here. There's obviously the stock market and what that says long term about the housing markets here in Australia. Then there's obviously all the talk about inflation and where interest rates go. Let's start with that, shall we? Because that technically should give a boost to potential property buyers and investors as well.
Well, you're right, Ross. If we do see interest rates being cut sooner rather than later, then obviously borrowing capacities will increase. But I guess it's the signal of cutting interest rates sooner than expected and what that might mean for the broader economy. Although keep in mind, at the start of the year, most people were expecting that we would get interest rate cuts around September or October of this year. Then those expectations were pushed out well into next year. And looking at the close of the market on Friday, expectations were for a cut in February. But given what we've seen on the stock market and given what's happening in the US, I guess the likelihood of an interest rate cut late this year is probably increasing.
Okay, so then just talk me about the stock market and what's taken place today, because we can't ignore the fact that all markets in some ways are related. So when stock markets become incredibly volatile or there are big falls there, what's the fallout historically when it comes to the stock market? To the housing market, rather.
Well, obviously there's been a big sell-off in the stock market here in Australia, but also a big sell-off in the US. The reason for that is people are expecting, or the weak labour market results on Friday gave concerns to investors that we'd actually see a hard landing in the US. And obviously if there's a hard landing in the largest economy in the world, then that's bad news for the rest of the world. Here in Australia, obviously things are somewhat different. But, you know, the sentiment that we're seeing in the US is playing out here as well. And what it means in terms of Australian housing is that, you know, maybe people are going to look to put their money somewhere else, and housing might be an option there. And as we mentioned, obviously, that it is bringing forward the expectation of when we are going to get interest rate cuts. And if we get interest rate cuts sooner, along with the fact that we've just had a boost by the tax cuts to household incomes and borrowing capacity, it might actually be positive for the housing market. It might lead to more transactions. And even though property prices have been slowing over the last 5 months, might start pushing prices a little bit higher as well.
It's fascinating because that has happened in the past where the stock market suddenly turns turtle and basically starts to fall, and all of a sudden people pull their money out and go straight to the housing market, which pushes that up. But the real issue here, and it's something obviously the Reserve Bank is highly conscious of, and that is the employment market in Australia. That's the thing that really keeps the housing market intact, isn't it?
It is, and we've still got a really tight labour market. The unemployment rate's at the moment sitting at about 4%. It was down around 3.5%, so it has trended a little bit higher. We've still got very low underemployment. We've still got really strong jobs creation, especially when you consider how strong population growth is at the moment. And keep in mind as well that the unemployment rate between 2008 and 2021 had only dipped below 5% on a couple of occasions. So even though the unemployment rate has drifted higher and may drift even higher from where we are at the moment, it's still very low compared to what we've seen over the last few decades.
And do I read too much into REITs in America and here in Australia? So real estate investment trusts for those who are trying to keep up. So REITs, that they have actually fallen on the stock market along with the rest of these markets. Do we read too much into that in terms of the future of real estate here in Australia?
I think, the commercial property sector has been doing it tough for a couple of years now. So I'm not really surprised that we've seen a drop in REITs both in the US and in Australia. And in fact, the Property Council last week published their latest office market report. And we can see in some of the smaller capital cities that the office market is starting to improve. Vacancies are falling, but there is obviously still a lot of supply coming online, and we're still recovering from all that working from home that happened during the pandemic, and it is proving more difficult to get people back into the office. But of course, REITs aren't just about office, they're also about retail, and if we do have a recession, retail will likely slow down. The market that has been particularly strong and continues to be really strong, though, is the industrial space. And I don't see any sign of that market weakening. So when you're talking about REITs, yes, we talk about commercial property in a holistic sense, but different parts of that market are operating in very different ways.
I'll tell you what, Cam Kusher, it's something that people will continue to watch, and we'll certainly be across it with you as well. Many thanks for your time.